I think this year we'll see net buying,
Absolutely.
strong net buying, but considerably less than last year and the year before. But when we have a new wave of buying from Western investors, institutions and retail, then I think gold and silver both are going to move meaningfully.
Gold prices initially dipped, but then recovered above $2,300 last week. Adrian Day noted gold's resilience, despite concerns, driven by central bank and Chinese demand. Economic worries in China led to increased gold purchases. Despite outflows in gold ETFs, Adrian anticipates potential Western investor buying, affecting gold and silver prices by 2024's end.
You know, for an insurance asset, a defensive asset, to move like that is really astonishing. We all know the reasons. I won't go into it. So we pulled back from the 2,400 level. We're now just above 2,300 as we talk. But again, that's not surprising given the move we've had. And I would characterize it as gold is really resisting dropping. Or in the US, it's dropped in one of those markets and then slowly recovered, some ground. So it's really resisting dropping. But what I see for the balance of the year, as we've said, at the moment, it's the vast majority of buying in the last 3 months, but also in the last 18 months, but particularly, let's say this year, has been central banks and Chinese savers.
Right.
We shouldn't ignore the Chinese savers because, they're concerned about their economy. They're concerned about the yuan devaluation, looking for a way to protect their purchasing power. Right. And they're not going to put their money in the bank. They're worried about the banking sector. They're not going to put their money in real estate, which is where Chinese people traditionally have put their money. And they're not going to put them in stocks with the stocks as low as they are. Some of it's going into stocks. We've seen a rally in Chinese stocks in the last couple of weeks. But most of it is going into gold. They can't put it into Bitcoin, as you know, or cryptos. They're banned. Right. So most of it is going into gold.
Gold prices soared from $2,000 to $2,400 in 3 months, despite the strong dollar, driven by central bank and Chinese demand. Chinese investors are turning to gold due to economic concerns. While Western investors have yet to join significantly, a potential shift in sentiment could lead to significant price movements later this year. Let's return to the interview.
I don't think we can avoid it.
Mm-hmm.
But two things on that. One is, the lower half of the income are in much more trouble than the upper half, and particularly the upper 20%. So when people say to me, well, the economy's doing great, I say it might be doing great for you, but it's not doing great for 50% of the population. That's one thing. And we've said this before, but when you have ultra easy money for so long, and we had ultra easy money from 2009 all the way through to 2022, and particularly after COVID, but you've got that easy money for so long, and interest rates, they were zero lower bound in the US for a long period of time, where people could borrow money, particularly if they had collateral, at very low rates. Then it takes longer for the impact of higher interest rates to show up in a recession. But everything is pointing in that direction. So I think the economy is slowing, and it's very clear from Powell as well as some of the other Fed members that they really, well, from Powell in particular, he really wants to cut rates, but he wants to do it when economic reports allow him to do it, which they're simply not doing at the moment. Fewer will roll over more treasuries.
Right.
We'll be selling fewer treasuries in the market because they're concerned about the friggin' treasury market. There's no one wants to buy them at these
Nobody
rates.
wants to buy.
China's got enough, thank you. They don't want any more. Russia's certainly not buying.
Right.
And the people that are buying now the foreign buyers that are buying now are primarily hedge funds that are not looking to buy and hold. That means that supply will be coming onto the market at some point. And they are very price sensitive. They're not buying as a reserve asset. You've got $100 billion to employ. Well, you've got to put it somewhere, and treasuries are an obvious place to put it. But if you're a hedge fund buying through a Cayman or through Brussels, you buy because you think you can make money on the trade in the next month or two. Yeah. So you want higher rates.
Economic indicators suggest a looming recession, particularly affecting lower-income groups. Powell aims to cut rates to address government debt interest payments. Concerns over the Treasury market are evident, with the Fed reducing bond sales. Foreign buyers, mainly hedge funds, add to market uncertainty. I'd love to hear your thoughts in the comments section below. Don't forget to like, subscribe, and turn on post notifications for more content like this. Thanks for watching.